Hey guys, welcome into Insurance 101. I guess that makes me Professor Paul Fortenberry with Wyatt Insurance, and today we're talking about loss cost multipliers. Short is LCM, and that has to do with your work comp rate and how that's figured out. So let's start at the very beginning with your work comp rate and the state rate. So the state takes every single code and gives it a very specific rate based on what the NCCI, that's who does all of work comp, specifically here for the state of Tennessee and a number of other states throughout the country. But they say, hey, we believe this code needs to be this much. But then you've got a couple other factors, including the LCM, that determines your final rate per $100 of payroll. So let's do some math, work through it, and show you why your LCM is so important and that you need to know it. So let's just go with 8810. That's one of the most basic codes that there is. It's for office workers. That's going to be our example. But again, there are different codes for every single kind of job there is, right? There's a plumbing code, an electrician code, a driver code. But today, 8810, that's what we're going to use. And let's say the NCCI, who governs work comp for Tennessee specifically and other states, says, hey, we think 8810 should be $1. That's the starting place. So every single work comp carrier, that's where they're starting at, $1 per $100 of payroll. So let's go ahead and put that $1 up there. Now, the LCM is why different work comp carriers have different rates. So each carrier is going to take a look at their losses over the last several years and say, hey, we've had a few losses, we've had an average few years of losses, or hey man, we've had a long history of bad losses, or hey, we don't love work comp, so we're gonna make it more expensive, so if we have to do it, we'll make a lot of money off of it. There's a lot of different reasons why they would want different rates, but most of it is based on losses that carrier has experienced. So let's take a look. Let's say carrier A has very few losses across the board, right? They're doing great and they have, they're making a lot of money, so they can lower their work comp rates. That may be for a couple different reasons. Maybe they have great loss control, they're only very choosy with customers, but let's say they have a very low LCM. So let's put at 1.20. So that's a great LCM to have, right? Let's say carrier B, they have losses. It's not horrible, it's not terrible, but it's not great. It's not as great as carrier A. So they are going to say, hey, our loss cost multiplier is 1.6, right? Maybe a little bit above average what we see, but 1.6 right in the middle there. But then carrier C, man, they have experienced a lot of losses. They put really high risk with this carrier. So man, they've got a really high LCM because they need to make back that money, right? So they've got a 2.2 LCM. All right, so we've got our state rate, we've got our LCM, and you multiply these to determine your final rate per $100 of payroll. So easy math, right? We're just in 101 class, so nothing complicated. So the final rate per $100 payroll for carrier 1, that's right, $1.20 for carrier A, not carrier 1. Right here, $1.60. And then carrier C, you've got $2.20. So obviously, it's a pretty big difference between these three carriers, all for somebody doing the same job. So how does that play out, right? Let's take a look at, let's say this company had $100,000 of payroll, right? Well, what's that cost to them going to be? For carrier A, for a company that has 8810 with $100,000 of payroll, they're going to be paying $1,200 for their work comp base rate, right? This is before you get all the discounts, before your mod experience number, all that stuff. This is just at the very top of your work comp invoice. If you're looking at that, that's what that's going to be. All right, carrier B is going to be $1,600. And then carrier C, $2,200. So you can see a huge difference between carrier A and carrier C charging for the same code. So your LCM is so important in determining your final cost. You've really got to watch that and make sure that you're with the right carrier and your brokers and your broker's really measuring this and looking out for you to make sure you have the best work comp rate possible. And one thing that's kind of sneaky that, I don't want to say sneaky in a bad way, or just one thing that a large parent company may do is they may actually have all 3 tiers, right? They may have 3 different work comp carriers within their parent company that, depending on your losses as a company, they'll stick you with the different companies, right? If you've had great losses, no losses, they may stick you with one of their own companies that has a low LCM, but hey, they still want to make money off of you and you've had a lot of losses, they'll stick you there and they'll just charge you more. So a parent company can put you within its own company different carriers that they own, so that's something to watch out for as well. But absolutely, LCM is so important in determining your work comp rate, and I appreciate you watching this video. Hope you learned something, and if you ever need anything in the insurance world, commercial insurance world, make sure to reach out to Wyatt Insurance at wyattinsurance.com, see if we can help you out. Thanks.